Nothing ever becomes real till it's experienced. That's John Keats, the English romantic poet. And Keats makes an extremely good point that we push every single day here at Charting Wealth is that you have to experience what we do. That is by joining us 10 to 15 minutes every day for the program as we go through our weekly 2-day and 4-hour charts on the ETFs, the two stock indexes, 20-year bonds, and gold. And then you have to practice trade. If you're not practice trading and experiencing reality by practicing, it's never going to become real to you. You're never going to really know what you are doing. You may think you are, but I'm telling you, you need to practice trade with us day after day, week after week, month after month, showing yourself approved by what you are achieving, that you're achieving successful trades. Just because you have one or two, and you think, now I'm God's gift to investing and trading, I'll go out there and make millions of dollars, I can assure you you're going to lose. We're not a stock calling service. We're an education firm. We want you to practice with us. Our methods are simple and they are accurate, but you have got to practice. You will not experience reality unless you practice. That's what we need you to do. You'll see in the show notes there are PDFs, there are weekly and daily and trade market worksheets, and we want you to have those. Those are for free. If you want to buy our book, that'd be great. You want to be a Patreon supporter, that'd be great. Let's jump into these charts and talk about what we're seeing. Remember, I had a weekly vertical crossover that occurred back on this last Friday. We have a nice down candle that's forming, hitting lower marks than it did the prior week, which is what we want to see. Price percent oscillator still dropping, derivative oscillator gaining downward momentum. Had a bit of a pull back on our downward move today. The S&P 500 up 0.27%. After being down the prior 2 days. And again, we'll talk about that as we move on in. But our weekly still moving down quite strongly. Everything looks good. Price movement is well below the weekly and below the 2-day. We go from the weekly to the 2-day. What do we see there? Seeing not going down at as strong an angle as it had been, still heading down quite nicely. Derivative oscillators losing downward momentum. And the only concern I see as far as our candle goes, and don't forget, this is just the first day of the latest 2-day candle. It's still a down candle, even though it was an up day. These are Heikin Ashi candlesticks. They show average pace. You want to know what those are about? Take the training at chartingwealth.com under Heikin Ashi candlesticks. I'm going to actually, at the end of the video, if you're listening to the audio, you can go to the website and get the Heikin Ashi training. If you're listening to the audio. If you're watching the video, you'll see at the end of the video, I'm going to put the training we have. About 120,000 people, I think, have taken that. You'll really get a lot out of it. Heikin Ashi means average pace in Japanese. That's what it helps you see. We see the average pace of prices still moving down. In fact, actually moving down faster than we saw with the prior trend line. So we'll see how things go on Friday. Again, see a down candle there. We go to the 4-hour chart. What do we see there? Things flattening. We see that basically a little up movement in the morning, little down movement in the afternoon. What we see are a doji in the morning and a spinning top in the afternoon. Indecision tending down is how we ended it. Well below the 2-day and the weekly trend line. So we'll just continue to keep our eye on things. Of course, we had, afternoon of drops there. Well, morning drops, afternoon drops on Tuesday, morning drop on Wednesday, and Wednesday afternoon, and then a sideways slide mostly on Thursday. So we'll continue to watch, see what we see after this weekly vertical crossover. So again, continuing in that, still seeing things moving down on the 2-day and the weekly. We go from the S&P 500 to the NASDAQ 100. Not getting to bonds just yet. We see price movements well below the weekly and below the 2-day. Derivative oscillator gaining downward momentum on the NASDAQ 100. Price percent oscillator heading down at the same strong angle. We go to the 2-day chart, still heading down quite nicely. First day of the latest 2-day candle right in line with lots of connected candles in the 2-day trend line. Derivative oscillator losing some downward momentum, but that price percent oscillator still heading down quite nicely. We look at the 4-hour chart, very similar to what we saw in the S&P 500. Spinning top in the morning, more of a doji in the afternoon, a little bit different. But again, indecision tending down is how we ended the day. Derivative oscillator losing momentum. Price percent oscillator is heading up on the 4-hour chart. And again, with that sideways slide, really bottomed out all the way back in the morning on Wednesday. So we'll see how things shape up, what happens on Friday. Our play is still underway, particularly with those bigger charts. We go now to bonds. Look at this play, my friends. Is that not beautiful? Continuing up strong, up 0.86% for the day. We see the price percent oscillator spiking up. Derivative oscillator heading up quite strongly, still way out of the Bollinger Bands for this weekly chart. We go from the weekly to the 2-day. And of course, what do we see there? Again, nice price movement continuing to head up. Just the first day of the latest 2-day candle gaining momentum on the derivative oscillator, price percent oscillator moving up strongly. That's beautiful. Go to that 4-hour chart. And of course, folks, our jumping in point was in the afternoon last Thursday, so a week ago. Jumping in point, again, it's hard to call it on the Heikin Ashi candlestick, somewhere in the neighborhood of 126. And of course, so far hit a high at 130.23, so about $4, close to that, over the course of 1 week. That's not bad in anybody's book, is it? So quite happy with that. You guys continue to pay attention to what's going on there on bonds, but that has been a beautiful trade. I know a lot of you were waiting for bonds quite a while to find a jumping in point, and darned if we didn't find it, my friends. Is that not true? So things are looking nice in bonds. Continue to keep your eye on things. Things have been sliding sideways a little bit, popped up again, up nicely. I mean, 0.86% is nothing to sneeze about, but again, it hit close to that all the way back on, back on Wednesday morning. So keep your eye on things. Hopefully bonds will just continue to move up. As far as our 2-day and our weekly charts are, they're showing us continued nice movement up. Let's head from bonds to our last chart. I want to make sure we always start with the weekly. We always finish with gold. Love gold. What's gold doing? Well, gold's still in a confirmed down move on the weekly chart, going pretty flat on that price percent oscillator. Derivative oscillator continuing to lose downward momentum. And what do we see going on with the candle? Well, it's a green spinning top, means indecision, tending up, just pushing through that weekly down trend line. So again, still confirmed down on the weekly. What's up with the 2-day? 2 days confirmed up, so we've got that divergence between the weekly and the 2-day. Means there's no trade in gold right now until they're both moving in the same direction. But we do see that 2-day chart not heading toward a crossover going down, but pulling away from the red signal line on the price percent oscillator. And we see a little bit of growth so far, first day of this latest 2-day candle, in the derivative oscillator, turning a little greener, getting a little longer. That candle so far, first day of the latest 2-day candle, pushing through the gold trend line. That gold is always the weekly. Again, the reason we colored that gold is because that's where the big money is. The bigger the chart, the bigger the money. So pushing through there. So again, don't know where gold's going to end up till we can find a trade on it, because got to have that weekly in the same direction as the 2-day. We do see the 4-hour chart pushing through the 2-day trend line in the morning. I'm sorry, the weekly trend line in the morning and in the afternoon. And again, up in the morning, up in the afternoon. Derivative oscillator gaining upward momentum. Price percent oscillator heading up also. So again, waiting for gold to settle out tell us what's going on there. Folks, another lesson I'm going to do one and cover this a little more in depth, but people ask me, what's the derivative oscillator all about? We use the derivative oscillator as confirmation when things cross over at the same time, talking in the same candle, whether it's a 4-hour, 2-day, or weekly. When you see the derivative oscillator and the price percent oscillator cross over at the same time, typically means more of a likelihood that things are going to move in that direction for a sustained time period, a longer time period. If they're crossing at different times, we see that if the price percent oscillator doesn't move over at the same time in the same direction as the derivative oscillator, price percent and derivative moving over at the same time together, if that doesn't happen, that typically is more of a weaker kind of move and makes us a little more anxious about how long that'll be sustained. So that's the reason we look at these together, and that's really the function we use mostly of the derivative oscillator. So we appreciate you being with us today. If you haven't bought our book, we've been sending them out overseas. We've been sending them out in the United States. We're happy to get you your autographed copy, Charting Your Way to Wealth. I am pleased to announce I've already written the introduction and am in the first chapter of the first section. Got 3 sections in the new book. It is called Optional Wealth. I really like that. It's going to be about options, about a whole bunch of really interesting stuff. And working on it, don't know how long the new book is going to take, but by all means, you got to have the first book first. This is a sequel to that. So please, if you haven't already purchased Charting Your Way to Wealth, have a copy for you. It helps support our work here at the channel. You can also help support us further by becoming a Patreon supporter. We appreciate all the new people that have signed up lately. 3 levels of support there. Any of those levels get you involved in our monthly Q&A coming up next Wednesday the 5th at 12:30 Eastern Daylight Time in the United States. Want everybody to know of that. Go ahead and start getting your questions in if you are a Patreon supporter. And of course, if you are that intermediate level, let me know when. I know I've got a couple of phone calls over the next day to our mid-level Patreon supporters. That's a 15-minute phone call once a month just with you and me to talk about things. And of course, that mid-level also receives a free book, another little bonus. Everybody also gets to participate in the once-a-month video that I do for you on the stocks and ETFs you want me to review. So Patreon supporters also feel free to email me on that. If you live overseas and want to buy the book, you can't buy it through Square for some screwy reason. So go ahead and email me, cw@chartingwealth.com. We'll get you an invoice from PayPal and we'll get your book right out to you. Everybody else, follow the link in the show notes if you're in the United States to buy our book. I'm going to send you an autographed copy. And again, we so appreciate your support. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.